Once again, all right, here we go. We are addressing the short and distort report that recently just came out. This is Evan Gappelberg. For those that don't know me, I'm CEO of NexTech AR Solutions, founder of the company back in January of 2018, largest single shareholder. I continue to buy shares. This year, I've purchased over 1 million shares and continue to invest in the company without selling any shares. And so NexTech AR Solutions has been attacked once again by a short and distort report on Seeking Alpha this time. Most of it is regurgitation of the Hindenburg report. I'm going to address it. Western Edge is somebody that I do not know. I have never spoken to Western Edge. Clearly, they're hiding behind some name that's kind of random, and clearly, they never called me. They never did any research on the company. They never actually spoke to anybody at the company. They just don't know what they're talking about. And we're here today to review the reality of what they're saying. And so, reality versus mirage, that's exactly right. You're the mirage, we're the reality. So let's get started. NexTech AR Solutions, the revolution of augmented reality. We do bill ourselves as an augmented reality company because that's what we are. And we have a pretty extensive technology stack. We just launched Screen AR. That's our Screen AR. We actually just signed up a customer. We launched it on Thursday. Friday, we land our first new customer. Amazing. That means that product is going to be a hit. We claim to be partnering with an increasing number of Fortune 500 companies. Yes, that is true because that's what we're doing. And so it's continuing, and every day we're talking to more and more it's actually Fortune 1000 companies. To be specific, it's even bigger than the Fortune 500. The stock, yes, has had a terrific run. However, it's done it on the back of substantial acquisitions, revenue, and technological innovations. The CEO's bio, he uses the word suspiciously absent from its website. I don't know how many CEOs put their entire bio on their website. If you think about the company's website, we use it primarily for basically informing investors about what we do and also for generating business. It's a lead gen site primarily. So my bio is available. It's in our presentation deck. So this idea that it's suspiciously absent is just, again, starting to use words that are inappropriate. I'm not going to read my bio. Pulling back the curtain. Yes, why don't we do that? Let's talk about future farm technologies, which we've talked about before. I brought in the seed capital for future farm technologies when it first started back in 2015. We went and got listed in 2016. It was a huge home run. Investors made a lot of money. Of course, it's part of the cannabis complex, and if you look at all cannabis stocks, they've all basically gone down by 80-90%. So the fact that I sold my shares and the fact that I made money, does that make me a bad person? I don't think so. Does that make me a bad investor? I think quite the opposite. So I invested, I was a consultant, but I was not CEO, I was not a director of that company, nor was I an officer. And so we did get started with Future Farm. As far as the spinoff, yes, we got spun out of Future Farm. It was actually a better way to go public than the standard, merging into a shell, because we ended up with Future Farm shareholders, and they've been supportive of our stock. If you look at the acquisitions, etc. Training, we did purchase that from our previous COO. It worked to a degree, although it wasn't a huge hit for us. AR e-commerce, which is literally a company that sells vacuum cleaners. Actually, it's a home appliance company that is part of our e-commerce division. We've mentioned this many times between all of the conference calls that we do, that we own two e-commerce businesses that we acquired in 2019. Those businesses we use as a testing ground, a staging ground for augmented reality. The websites have AR built into them. We're actually about to release some new and super exciting, we think, game changing technology related to testing that's been going on these sites. So these sites are very, very valuable to us. They generate positive cash flow. What does that mean? They're successful businesses. They help us as a company to offset our burn as we continue to invest in technology. So the fact is that those businesses are positives for the company and not negatives. Hoot, which we paid $60,000 for, has not really contributed much, I would say, to our business. So in 2019, we were just getting started. If you look at the numbers here, e-commerce 1.5 million, corporate and tech $3,000. First of all, let's be clear. This is for a 3-month period. 3 months that we were just getting started as augmented reality is a new industry. We just got started and we landed a number of accounts. $3,000 sounds very small. However, if you think about it, every one of our accounts was paying us $50 per month per SKU. So divide 3,000 by 50, and that's how many SKUs basically that were live. Again, we were just testing the market, just getting started. Our e-com business generated the majority of revenue in 2019, but that was 2019. We're now in 2020, and it's shifting dramatically. We were told by our accountants not to break down our revenue, primarily because if you look at that 1.5 million, while it is e-com, we also integrated our augmented reality into those sites. What does that mean? 10, 20, 30% of revenue from our e-com business is being generated because of the augmented reality that's built in. So $300,000, $400,000, $500,000 from that e-com column should be in corporate and technology. We had a discussion with our auditors. They disagreed. They said it was too complicated to try and separate. So what the auditors said was, we're going to just report as one number. It wasn't a NexTech decision. It wasn't my decision. I would have preferred to break the numbers out, but our auditor said it's a little too complicated. Let's just put one number out, which we've done, and that's the story there. Yes, we do pay for PR. We do not have 8 promotional outlets. That's not true. That is a lie. We employ maybe 3 currently. We do put out press releases so that our investors are aware of what's going on at the company. How else would you know? If we didn't put out a press release as a startup company, you would have no idea. It's not like anybody knows anything about NexTech. It's not like we're IBM. It's not like we're Google. People don't know what NexTech is doing. So we put out press releases to inform investors, and we think that's the right way to communicate. So that's how NexTech operates. Now this is interesting. I don't even know his name. When Mr. Western Edge is going back to a Hindenburg report, which we proved was false, misleading, filled with lies, innuendo. We spent an hour going through their report. He's now regurgitating that Hindenburg's diligence, because this guy doesn't do any of his own due diligence. He now is calling up Hindenburg. What a joke. So he's now saying, hey, Hindenburg said, we've already proven that Hindenburg lied. We went on, we went out to our customers and we had them give testimonials. If you go back in time, you could see the video and see that we proved it. Looking at our financials, quarterly income statements, you can see they look spectacular, which they are. Um, and he even talks about 200% growth. R&D spending is happening, although we have to be realistic with our spending. We don't want to spend more money than we have. That's how you go out of business. So we're spending money on sales and marketing to generate revenue. In 2020, 2021, as we generate more revenue and we have more cash flow coming in, more money will go to R&D. But as a business manager, obviously Western Edge never ran a business. If you spend all your money, you blow it all on R&D, guess what? You don't have money for marketing. Guess what? Your revenues don't grow. Guess what? Your valuation doesn't grow. Guess what? You can't raise money. You can't continue to build a business. End of the story. You know, so he should go back to business school and learn a little bit about how R&D spending works. Fast forward 2020, we're putting out press releases. He talks about the Jalokia acquisition. Again, he's wrong. The Jalokia acquisition, which has been the best acquisition that we've made to date, although it's not our last acquisition, we paid $1 million for. It was an all stock deal. He says we paid $4.8 million. That's a lie. It's not the number. We paid $1 million in stock, 100% stock. And we have an earnout, which means if that platform generates an additional $4 million in revenue, we pay the principals of Jalokia that we purchased the business from an additional $4 million worth of stock in 12 months. So at the 12-month price, wherever the stock is, they get $4 million worth of stock. That's what we paid for Jalokia. And Jalokia, we've transformed into a very, very valuable, rapidly growing video conferencing virtual events platform, which everybody should be super excited about because it's transformed NexTech. As we've integrated our augmented reality into the platform, we've taken it to a whole nother level. And that's really what we do. He talks about bait and switch. Again, using big words to try and scare our investors. Negativity. I don't understand negativity towards successful acquisitions. He's saying that we position ourselves as an augmented reality company with exploding revenues while acquiring several unrelated and diverse businesses to contribute to hyper revenue growth. Now, if he had called me, and he mentions Theranos, which was the biggest scam, of all time. Of course, they didn't have a product, and we're far, far, far different than Theranos. So just to be clear, again, Mr. Western Edge never called, which he should have done. And we would have explained to him that these businesses that we acquire, while they might seem to be unrelated, that's not actually true. Again, e-commerce, we have a web AR business segment that we sell our AR services to. E-commerce sites that we own, we use as a testing ground for these exact same services that we sell to other e-commerce sites. So there's perfect synergy there, and that makes perfect sense. The Jalokia platform, virtual events, video conferencing, arguably the fastest growing segment of technology today. We've integrated our augmented reality into that platform, creating something net new. Again, taking something like e-commerce, adding AR, taking something like video conferencing, adding AR. That's what we do at NexTech. We have a 3D AR ad network. It's an ad network, 3D ad network, ad AR. That's how NexTech generates value for its shareholders. And so this idea that it's this bait and switch game, again, totally misleading, untrue. Let's take a look at management's compensation and see what other misleading information Mr. Western Edge has for us here. So he talks about my extensive background, hedge fund, Wall Street manager. Instead, he talks about insider dealings between management and NexTech. Again, he's referring to Hindenburg's report. I've already come out and rebutted Hindenburg's report and explained that it's just a bunch of lies. And so, if you want to learn more about that, go back to the video I put out a couple months ago. So, he talks about awarding management 650,000 in share-based compensation, 25% of revenues, and then he talks about 40% of revenues in share-based compensation. So let's be crystal clear. First of all, I've purchased all my shares aside from share-based compensation. So I've been in the market buying stock. I've bought private placements. I've invested millions of dollars into NexTech. Huge, huge chunk of my net worth went into NexTech, and I've not sold my shares. Share-based payments. Since we started the business, because we didn't have a ton of cash, I elected to take all my compensation in stock. Now, initially, the stock started out when we first started at 25 cents. As time went on, the stock went up. At 80 cents a share, we were able to basically secure a block of warrants that's used for share. It's just like options. It's no different, except it's called warrants. And so I get stock-based compensation. In other words, my salary gets paid in stock, which I do not sell, every month. And so does Paul Duffy, and so does Kashif Malik. So what does that mean? That means we're taking a risk. We're not taking cash out of the company. This is a positive. That's not cash. That's not $650,000 worth of cash. That's stock. And the way it works is, even though it actually only equated to, for me, let's say, 40,000 shares as the CEO of the company, roughly $25,000 at the 80 cent price. As the stock goes up, yes, it looks like a large number. But once again, it was when the stock was 80 cents. It's risky for me to be taking all my pay and salary. I can't pay my mortgage with the stock. I can't pay for my cars. I can't pay for food. I can't pay for my kids' college education. All of that money has to come out of my savings account because this share-based payment is not liquid. So I just want to be crystal clear. There's zero benefit to me today. At some point in the future, maybe in 2021, 2022, 2023, whatever, if I sell shares, I benefit. Today, no benefit. So this idea that we're lining our pockets and this is some kind of pump and dump is just a fallacy. It's just a made up story by Western Edge, who nobody even knows who he is. Like, who is this guy? Yeah, it's unbelievable and quite sad. So he says that we've accumulated 15% of the shares outstanding, mostly from awards and grants. Not actually true. Again, we own a larger piece, almost 30%, and they've been purchased. Purchased. That means cash. We write checks. So on the latest conference call, I must apologize. On the latest conference call, we did have a hiccup. It was our first quarterly report that we did live, and I was using a service, and that service only allowed for 30 minutes. I think I just clicked the wrong button. Again, it was a new service, and so within that conference call, it just got cut off. It literally said, just like on Zoom, this call is going to end in 2 minutes, and then it just ended. And so we did dial back in, and we did have a continuation of that call. But again, Western Edge, we flubbed it, but it wasn't intentional. and it happens on occasion. We're only human. So on occasion we do make mistakes. Like I do apologize for that, and that will not happen again. Lisa Thompson, Zach's analyst, was asking questions. I don't know exactly where he's going with this, other than he's trying to say that we somehow ran away. So not true. So far from the truth. It was just a glitch in our new software that we were using. So where does NexTech go from here? He talks a bit about that we need more cash, and we're going to continue to award management. I mean, again, far, far, far from the truth. We have a substantial amount of cash, and we have deals coming in, revenues coming in, and we believe that our market cap is not overvalued. And so he's targeting a penny. A penny. What a joke. I mean, honestly, does anybody believe that a penny is a legit target? Even if he was going to come out with some low number, a penny makes him seem like he's just full of it, right? I mean, so, talks about, scamming, again, scamming investors, using big bad words, scammed investors. There was no scam. I invested in Future Farm. I sold, made money. That's not a scam. That's the way Wall Street works, the way investing works. I'm sure everybody on this call has bought and sold stock. Hopefully you're making money. That's the idea. And so the idea that that's a negative, that I sold stock in a company that I invested in, is really just ridiculous that anybody would see that as a negative. The fact is that I was an investor for 3 years before I sold. Think about that. I had gotten in 2015. The sales he's reporting here are 2018. So, it's just ridiculous. Virtual bud tender, that guy's pretty cool. Buddy the bud tender. We did play around a little bit with AR for cannabis. Didn't really work out. I want to point out disclosure. Western Edge, we are short NexTech. Now, the fact that he didn't say I makes me think that the we makes him a proxy for maybe Hindenburg. That's what I'm thinking. That this guy, I mean, it's hard to believe that Hindenburg wouldn't do their own research, but and I guess maybe they didn't want to come out again because they got, I guess, shown up the last time. But anyway, it's disturbing that shareholders have to go through this. I'm not enjoying it. I'm sure you're not enjoying it. But I will say this. Our business is better than it's ever been. Our technology is solid. Our customer wins continue to snowball. We just landed a deal today with the Canadian government. I mean, come on. Seriously. A penny? A hollow business? The Canadian government is signing contracts with NexTech AR Solutions. I mean, what more do investors need? I'm kind of shocked that everybody reacted so violently to this poorly written research report. And I would urge everybody to look at the guy's track record. It's not very good. His last short was IBM, which is up about $20 from when he said to short it. So it's easy to manipulate a company like NexTech that is small cap. IBM, not easy to manipulate, and he's wrong on IBM and he's wrong on NexTech. Everybody have a nice evening. Thank you.